Are you trading with the market or against it without even realizing? Understanding market sentiment can be the missing piece that separates profitable trades from costly mistakes. I'm Barry, a financial technician, and today I'll show you how to use live sentiment indicators to spot fear and greed in the markets and trade them to your advantage. Stick with me, because once you see how these tools work, you'll never look at market moves the same way again. Market sentiment is the overall mood of the market: fearful, greedy, optimistic, or panicked. And while it's invisible at first glance, we can measure it with proven tools. Let's start with the VIX Volatility Index. Known as the fear gauge, the VIX measures expected volatility in the S&P 500 over the next 30 days. When it spikes, like it did in March 2020, it shows investors are terrified. That panic often marks a buying opportunity for contrarians. On the other hand, a low VIX signals complacency, and that can be just as dangerous. Next, the New York Stock Exchange Advanced Decline Ratio. This measures how many stocks are rising versus falling. For example, if the ratio is above 2, it means for every stock falling, 2 are climbing, clear bullish sentiment. But if the line starts to fall while the index keeps rising, that's a warning sign that fewer stocks are carrying the market. Now, the AAII Sentiment Survey. This tracks how individual investors feel about the market: bullish, bearish, or neutral. When 70% of investors say they're bullish, that often signals we're near a top because the crowd is all in. Extreme pessimism, on the other hand, has historically marked bottoms. Another powerful tool is the Federal Reserve Bank Financial Stress Index. This combines spreads, correlations, and volatility into a single number. When it's above 0, markets are under stress. Fear dominates. Below 0, markets are calm. In 2008, it spiked to a record level, giving a clear warning of systemic panic. And don't forget technical sentiment indicators like the TradingView Buy-Sell Gauge. It blends 16 popular technical indicators into a simple signal, helping you see if the crowd is leaning bullish or bearish right now. All of these tools reflect one thing: psychology. Greed pushes traders to chase prices higher. Fear makes them dump stocks at the worst moment. Recognizing these cycles gives you an edge. So here's the big picture. Market sentiment is essentially the mood of traders, and it is shaped by the emotions of fear and greed. You can measure this mood using indicators such as the VIX, the NYSE Advanced Decline Ratio, the AAII survey, and the Federal Reserve Financial Stress Index. When these indicators reach extreme levels, they often serve as warnings of turning points in the market, either a top driven by excessive greed or a bottom driven by fear. By combining sentiment analysis with technical analysis, you can anticipate shifts in the market before the majority of traders react. If you enjoyed this breakdown, hit like, subscribe, and check out the partner discounts for my recommended trading tools down below. Thanks for watching, and I'll see you in the next video.